Ethereum is likely to take off over the coming days. We've got a nice trend reversal on a bullish momentum. What does that mean? Well, we're going to dive into the technicals today. Yesterday, we had the CPI announcement, Consumer Price Index, and reversals tend to happen on that date. So Ethereum, let's dive straight into the technicals. When we're looking at any market, any time frame, 5s and 3s is most common. The second most common is 5s and 5s. You go, what you get? Right, well, we need to reevaluate the price data because of the big move to the downside that we had in the last couple of days. So what you'll see as an update, I've just updated this for you, is obviously the 1, 2, 3, 4, 5 on the upside is the same. Initially, this looked like an A, B, C correction and then continuation to the upside. However, we can clearly see that we've had this move to the upside here and then another move to the downside lower than this. So the second most common type of correction other than an ABC is actually an A, B, C, D, E. Question for you. Do you notice a difference between this 5-wave structure, 1, 2, 3, 4, 5, and this 5-wave structure? There's something very distinct. And if you can see the difference, you have valuable information. Shall I tell you what it is overlapping waves and non-overlapping waves. In other words, when we look at this low over here and this high, you can see that is not overlapping. Whereas when we look at this low over here and this high, it is overlapping. Like literally this wave overlaps into this wave, right? So that's an overlap. Whereas here, we do not have an overlap. Hopefully that makes sense. I'm gonna dive into that in a bit more detail. By the way, if you want access to this chart, I'm going to save it at the end. Is Ethereum. It's in the description link below. It's free. I've got quite a few of my charts, one of which is Ethereum. So if you want the analysis today, you can view only. It's a view only screenshot, live data and everything else, live price data. But you can also upload it into your own trading view and edit it as you see fit. So let me just touch on that because this is really, really important. Let me just do it like this so it's really clear. Sometimes, it's harder to see. If I just go market moves up, it moves down. And then even this wave, right? This wave here, you can see that there's a big gap between the two. So it means it's not overlapping. Whereas this one and this one, you can see that it's overlapping, like it's literally overlapping into the range. So what that tells us, because everything is driven by crowd psychology, human behavior, literally buying and selling, fear and greed. And when it's overlapping waves, it gives us a big clue that this is a correction. And a correction simply means after the correction is finished, what typically occurs is a continuation of the former impulsive trend. The former impulsive trend was this, right? So, because what we're doing here is looking to make money from the markets, whether you're just long-term buy and hold, whether you're trading the markets using CFDs or futures contracts, there's a few different ways of long in the market and short in the market. What we want to know is what direction is the probability of the trend. Well, right now it's up because we've got a few different factors. So what we're going to cover now, if I just bring this back up like so, is we're going to cover some Fibonacci price. If you're brand new to Elliott Wave, what I'm drawing on the charts here, and you're brand new to Fibonacci ratios, because it really can be super powerful, I'm going to highly encourage you to take my 4 Secrets masterclass. It's free. It's in the description link below. It's the way to onboard as one of my students. I teach. I've been doing this for 15 years. I've got a background in teaching mathematics, so I simplify things. So the masterclass is like a gateway. Test it out. If you like it, you get a massive value. You have an opportunity to buy my courses and you can join my private community. So what we're going to do now is the pattern looks pretty strong, right? It's still early days. You'll see down here, I've got a question mark. And the reason I got a question mark is it hasn't been confirmed yet. Ideally, I would like to see this high exceeded over the coming days, right? If that happens, that would be a strong signal that this low is going to hold, more than likely. But what we're going to use now is something called Fibonacci price. Now, what's cool about this is it's very objective in the sense of once you've done your counts, there's a particular ratio. It's called 78.6. It's the typical maximum correction. When you get a correction, after a big move to the upside and then a correction, typical maximum is 78.6. And you can see that the price hit that yesterday and the day before. So that's a really strong signal that we're at this typical common maximum zone. Next, what we're going to do is wave A, wave C, and wave E in this 5-wave corrective structure are related to each other. They tend to equal each other. And we can actually measure it and see with high probability by measuring. I'm going to do it over here. We're going to measure wave A in the green. So just move to the high, to the low, and we're going to project it from D. And you can see over here that it's in that zone. In other words, this price length on the way down is a very similar, almost identical, in fact, to this price length. That gives us more confidence that this low is likely to occur. At least a correction like this or like this, right? At least a movement to the upside. That's what we're looking for. Can we do that again? Yes, we can do that the same for wave C. So let's just take the wave B to wave C, project it from D, and you can see it overlaps the 78.6 in this. So this is called a cluster. So this is very significant. So now we've got an A, B, C, D, E of a wave 2 or B. 2 and B's look the same, so we don't need to get analytical on which one we think it is right now. It's actually better to not know, just because it doesn't make a difference at this stage. And right now we've got this Fibonacci price cluster. So this is why it's very highly probable that this high is going to get exceeded over the coming weeks. Not guaranteed, because we can never guarantee this, but we can have high probability. So we can bet on the long side and have a nice entry strategy. I'm currently putting long orders this morning, going long. So we want to go long on Ethereum. I'm going to show you one last thing, actually. I'm going to show you this. We've got momentum, right? On the daily chart, momentum is very, very useful. What I mean by this is, so the blue and the red line at the bottom is called, I use the stochastics RSI. It's basically when the blue line goes above the red, more often than not, it marries up with different lows that we see on the price data. So if we just kind of track it back, blue over the red, it married up with this low, blue over the red, married up with this low, and we had a nice movement up. Blue over the red, we had this nice movement up. And then guess what? Yesterday, blue over the red, and is in this zone. So we should get at least some type of movement to the upside. And ideally, I would like to see this high broken and then a nice continuation again. So again, I'm going to highly encourage you to get the charts. You know, this, I'm going to save this chart now, so you'll be able to get it straight away. But really, the masterclass, that will just take you to the next level. I'd love for you, you, to be one of my students. I just love teaching. I love teaching and simplifying things, but we're here to make money, and we need to identify the trend and then know how to trade it and make money, lock in profits in a logical, mechanical, non-emotional way. So I was gonna read you a quote from a book, but actually it's one of my favorite quotes. It's actually not in my book though. It's everything in life is difficult before it's easy. Everything. Whether it's Elliott wave counts, Fibonacci time, momentum, it's difficult. But it's like driving the car. When you first got into a car and you're trying to drive, learning to drive, there's a lot of moving parts and it is genuinely difficult. But after time, after practice and doing it for months and years, it becomes second nature. And that's the same for the markets. So it's all about just upskilling yourself and getting ready for the long game. 1 year, 3 years, 5 years, 10 years, and beyond. And just set yourself up for success where you can trade in a non-emotional, stress-free manner and treat it like a business.